Gramza, President Gramza Capital Management. Good morning, Dan, and thank you for joining us.
It's always a pleasure to be with you.
Great to have you on the show. Welcome back, and we're going together towards the weekend, Dan.
Yes, I'm excited about that, actually.
So, Dan, I just wanted to hear your thoughts when it comes to the PC price index year-on-year and month-on-month. Do you think that it is slightly above expectations, and specifically your expectations?
Well, I think it is. And when it comes to how the market absorbs that information, that's kind of what I'm focusing on today. I have to tell you, I was looking for the U.S. stock market to finish unchanged to higher, is what I'm looking for as we go into the weekend. I think we do have positive things surrounding the market. Part of that, I think, critical part is what you've mentioned, Alex, and that was the earnings that we've seen. Some companies have not made their objective, but right now over half of the companies in the S&P 500 have reported, and over 83% of them have beaten the earnings estimate. So what does that mean for us? It means that the foundation behind the market or under the market, I think, is still in place, which is one of the reasons why I'm still bullish on these markets. The other aspect when it comes to inflation, could we have some? Yes. Maybe the Fed is underestimating that. But we also know that the Fed's willing to tolerate some inflation too. So at what number are they going to now change their approach? To be determined, they've talked about 2.4%. I'm not really too worried about that, actually. I still think that the momentum is in our favor, and we are still in a throttled down situation. The markets are dampened. We're not fully turned on. We see it not only in the United States, but also with our friends in Europe.
Yeah, that's for sure. I just wanted to show you also very quickly how the earnings season is going. But first of all, futures, of course. First and foremost, futures so far below yesterday's record level, specifically for the S&P 500. What's driving the price action in your opinion, and why negative futures considering great earnings results from Amazon, from tech giants? And not only, we also saw some good numbers when it comes to the energy sector.
We did. I think Chevron missed their objective, but yeah, you're right. We've seen good numbers in that section. Well, let's start with the stocks in terms of where we are, and possibly what we're going to be seeing as we go into the weekend is the selling action that we are seeing right now as we come into the U.S. Open could be profit taking. There is this mood of uncertainty. The pandemic virus that we're still dealing with is still out there, and people are concerned about how and when that's going to finish and what is the impact on the economies. I think the action that we're seeing, for example, we're seeing some results in Europe and they're saying, okay, the second quarter we're going to be down, so therefore we have a recession. Well, that's not surprising. And so to see that, because the economies are slowed down, to see that kind of action, economic action, is reasonable. But I think some of that concern does bleed over to us in the United States. Remember, in the S&P 500, 45% of the income of those companies come from outside the United States. So maybe that's some of the filtering that we're seeing happening right now. But I would like to see, as we go into this weekend, for the market to be unchanged or maybe even slightly higher. That would be a sign of confidence as we go into this weekend.
I was wondering how to interpret the new all-time record highs of the copper.
The copper market is fascinating, and I think it makes sense. And primarily, it's because of what's happening in China. We want to remember, China controls about 48%, or consumes, I should say, about 48% of the copper supply. China's manufacturing is increasing. What we're also seeing is that the copper prices that you're seeing now has an impact throughout our economy. It's a very unique base metal. We don't have a substitute for it. And we use 400 to 600 pounds of copper in a new home in the United States. 40 to 90 pounds of copper in a new car, 4 times that amount in if we have an electric vehicle. So the demand is there. Our housing construction costs are, though, just increasing dramatically. We see it also in the lumber futures, a market that we don't look at too often, but the lumber market is it's skyrocketing. And it's because of a couple things. In 2015, we had a beetle that caused tremendous amount of damage to some of our forests. That was one issue. If you look at the northeast part of the United States and Canada, the eastern area, western Canada and northwestern United States, that's where a lot of our lumber comes from. And that's our pine, fir, spruce that we use in construction. So that has an impact also. So our higher copper prices, it has an impact in the appliance industry, the housing industry, transportation. So it's a dramatic situation we're faced with right now. Plus, we're seeing that increase in demand primarily in China.
Dan, I just wanted to comment very quickly the earnings season. I'm not sure you're seeing the charts that I'm showing, but I just wanted to show you very quickly Amazon, which is up about 3% in pre-market trading, but it had a great results yesterday. How do you explain this extremely moderate reaction of the market after beating all kind of expectations?
Boy, they sure did. I mean, you got to tip your hat to them. They're doing a great job. The momentum is in their favor. I do look for follow through in this market. I'm looking for a strong up day actually in Amazon. I think people are going to want to participate in that revenue stream that we saw coming. So I'm looking for an up day in that market. What we want to be careful with, though, is you don't want to see it trading below 3,400. If we do that today, that implies a down week next week. So how we finish today in Amazon, I think is going to be an important barometer for us leading into next week.
And what about Twitter? Do you think that the market's reaction is a little too harsh, considering that it got also positive data? Twitter is, how can I say, a very different animal compared to the other social media platforms. It's a little bit of more, how can I say, official platform for probably journalists most of all. So Twitter is off about 13.5% in pre-market trading, but data was not that disappointing. If I shall be honest, we did see earnings, EPS 16 cents per share versus 14 cents forecast by Refinitiv, then revenue 1.04 billion versus 1.03 billion, and monetizable daily active users at 199 million versus 200 million expected. So this is where Twitter missed monetizable daily active users. Do you think market is a little bit too harsh with the stock?
Actually, I do, and I like the way you said that, because you wouldn't expect this kind of reaction to the numbers they've come up with, which are really pretty positive. And it's a good sign for outlook, for what do we expect going forward. And remember, that's one of the things people look at when it comes to not only the stock indexes, but the stocks. It's that forward-looking outlook that kind of drives some of the pricing action that we're seeing. Twitter, I think, is a surprise. The reaction that we've seen for this, I don't think there's any real good explanation. Profit taking, no, this is not the behavior you see with profit taking. It implies something behind the scenes that maybe we're not seeing. I do not look for follow through to the downside next week. I would look for an inside day, kind of a quiet day on Monday.
All right, this is very interesting. On the other side, let's have a very quick check on ExxonMobil data. Exxon reported quarterly earnings of 65 cents per share, 6 cents a share above estimates. Revenue came in above forecasts as well. Exxon said it lowered cash operating expenses compared to a year ago and expects to deliver additional cost savings. Then we also saw Chevron, which matched forecasts with quarterly profit of 90 cents per share. With revenue above street forecast, Chevron profit fell, though, 30% from a year ago, with weaker refining margins among the factors offsetting higher oil and gas prices. And of course, shares are off about 2% in pre-market trading. What do you think about the energy sector in the United States?
Well, first, these numbers that we got, I think, are really interesting for the industry itself. and they're actually kind of encouraging. But when we think about crude oil, and we think about the global supply of crude oil, and we think about global demand for crude oil is about where it should be. And when you think about what's happened with crude, the oil sector, those larger explorer companies, you would expect to be marginally profitable, I would say. The numbers that where we are right now in crude oil, that $60 to 65 to 55 range, I think is reasonable when we look at the global situation. Now, we do see an increase in demand because some of the economy is getting turned on a little bit. We see that in China. China's buying more U.S. crude oil, for example, than it has in the past few months. So we're seeing some positive things in that regard. But crude oil, to me, is in a holding pattern. I don't see any reason for a huge increase in crude oil prices or a big decrease. I think this $5 to $10 range for the next few months, possibly the second quarter, even into the third quarter, would make sense. So let's go back to the sector that you're talking about, those larger oil companies. What would we look for them? I would look for them to be able to hold the gains that they have. And I'm not looking for them to scream to new highs. There's no reason to see dramatic moves in this market for those stocks up or down. But I think a sideways to slightly higher movement would be the expectation I have for that sector.
I was wondering, do you think that a crude oil market should be concerned in regards to what's going on in India?
Well, India is a large consumer of crude oil. There's no question about that. And they actually do buy some U.S. crude oil. I don't think so right now. But it will throttle some demand because their economy, again, is going to slow down. But I don't think it's going to have a shock effect to the market. There is definitely concern, unfortunately, for their terrible situation. But I don't see a big impact in terms of where crude oil prices are for it to cause a big movement up or down.
So far, the crude oil at $63 per barrel and the Brent at $66 per barrel, which are great levels considering what happened with the crude oil throughout this 2020 and of course the beginning of 2021. So of course I'd like to hear your thoughts when it comes to the Biden's proposal, which is already proposal. I mean, it's official when it comes to the capital gains tax hike. Do you think this is going to happen at all? And do you think that markets are supposed to be concerned about it?
Well, to some extent, concern, yes. I think there is concern. But here's what we want to keep in mind when it comes to political ideas, because that's the phase that it's in. This is a proposal. It's not a finished product, and it has to get through our legislative process before it really becomes reality. So any reaction that we're seeing to the Biden presentation, which hasn't been dramatic, is the market waiting for the smoke to clear and to see what reality is. So for the capital gains tax, some people feel that, well, it's for people over $1 million. It's not going to have an impact on me. It bleeds into a lot of other areas. If it dampens investment, that has an impact on all of us. So it remains to be seen. Is it going to be 40% or is it going to be someplace in between 28 and 40%? My feeling is it's going to be someplace in between. That when it's all said and done, then we can see how the market wants to react. But I think your point that you're raising is valid, that there is a concern of where is this all going to finish out. But it's a marathon right now. It's not a sprint. So I think we have to be patient to see how it does not change my outlook on the stock market, put it that way. And I'm bullish.
All right, this is extremely positive and of course extremely important. Let me ask you, do you think they expect a pullback, markets pullback?
I wouldn't be surprised. And the reason is we know the markets are very concerned about concerns. So if you read a news story that says the market is anticipating, the market is expecting, the market is concerned, those cause volatility. Those kind of statements, that perception causes volatility in the marketplace. But my feeling is it's not going to be a long-term trend change. A reaction? Yes. Could we have a down move? Yes. But is the trend still up from my point of view? And the answer is yes. So longer term, I'm still bullish on this market. And you know, Alex, I think it's important for us to think about not only these movements that you've mentioned, but what is it that you and I want from the market? When do we want this money? Is this our retirement money that we want in 10 or 20 years? Or is this money that we want today or tomorrow? Or I should say on Monday. But so that has an impact, right? So if we're looking, do you think the stock market could possibly be higher 10 years from now, 5 years from now? Then if you do, then you can be a little more tolerant about the volatility we may be seeing in between now and that point in time. So I think that's also important to keep in mind as you and I look at these equity markets.
All right, thank you very much. Once again, Dan Gramza, President, Gramza Capital Management. Thank you for joining us and have a great weekend ahead. Few hours to the weekend, Dan.
Thank you, that's right.
Let's do it this Friday. Have a great day ahead.
Thank you, you too.